This is a Crypto Legends podcast. In today's episode, meet crypto legend Georgy Sokolov, co-founder at Wirex, on bridging traditional and digital economies.
Welcome to another episode of Crypto Legends. Today, we are very lucky to have Georgy Sokolov, who is co-founder at Wirex, to tell us everything about the legendary tale of Wirex. Wirex has played a pioneering role in bridging the gap between traditional and digital economies. This crypto legend, way back in 2015, launched one of the first crypto-enabled debit cards, allowing consumers to spend crypto in their everyday lives. They've gone on to evolve the product to deliver more value to consumers, including their rewards program, Cryptoback. They have continued on this path of innovation ever since. Recently, they have demystified DeFi by abstracting complexity. Come and learn how they are giving a new generation of users access to DeFi by including unique features that make it easier and more secure than ever to use. Learn how this crypto legend took the leap across the pond to the US and created an impact with 150,000 registrations at the start. So to start with, Georgy, could you please tell us a bit about you and your path?
Sure. Talking about myself, I'm personally certainly not a legend. Wirex maybe to a degree, but yeah. I actually came a relatively non-traditional path into the industry, although quite for most people it's very new, right? Because the industry itself is new, but the wide majority of people are either from a developer background or finance background. I had neither. Although I did have a degree in IT at some point, but I spent most of my working life in freight aviation. So the only thing that sort of connected me to crypto industry was that I knew what an airdrop was, right? But in my world, airdrop was dropping cargo off the ramp of the plane in Antarctica rather than dropping tokens to users, you know. But yeah, it was just dived into the rabbit hole and never looked back. And in terms of Wirex itself, well, you summed it up pretty well. Yeah, we started in early 2015, long before crypto and blockchain became buzzwords.
That's really good. And can you tell us, like, what made you attracted so much to crypto? Was it through a friend reading things? What was this first leap, like from freight aviation to crypto?
For myself personally, it was actually a result of 2 years of hard work at a business school, because that's where we met with Dmitry, with one of the founders and now CEO of the company. So we studied together, we did a number of projects together, we did the graduation project together, which became a business of his, quite a successful one, but at that time I didn't join. But then about a year after the business school finished and I kind of had the life back into my body after working super hard for 2 years, and you start looking for another intellectual challenge. And that's when he occasionally mentioned this whole Bitcoin to me and the idea to try and make it spendable in real life. And I spent 2 weeks reading, couldn't sleep, and then, I decided that I would be in.
That's really good. I actually was at Bitcoin 2022 like a couple months ago and got to use the Lightning Network and got really excited about seeing the ability to actually pay in Bitcoin in different shops. So we see it's really coming, and we see also how in 2015 it was actually so early on, but I feel we're getting there basically. So now let's deep dive into today's topic, bridging traditional and digital economies. Your mission at Wirex is to make traditional and cryptocurrencies open to all. How has this shaped the journey you have been on?
Well, first of all, cryptocurrencies was almost singular, not a plural back then, right? So even Ethereum wasn't around yet. So we literally started just with Bitcoin. To make it open to all, that was probably not the idea at the time was to allow people to spend Bitcoin. Although back then it wasn't a huge use case, but certain people started feeling the need, and there was. I mean, even today it's hard to find places that accept Bitcoin, although there are much more of them. But back then it was virtually impossible. So the idea we had in mind that if cryptocurrency is a currency, if it's money, then it needs to be able to be spent, right? Because one of the fundamental features of money is being a means of exchange. So yeah, that's where the card came from.
And so, what have been the key challenges when bridging traditional and digital finance? It was so early on that I could we could expect that there has been a few challenges you had to tackle during the road.
Well, initially the challenges evolve as well, right? Although many of them remain the same or similar, but they evolve together with the industry. Back then, the main challenge was probably that no one was willing to work with us. No bank would be ready to give us a simple bank account, and not to mention like bank accounts for our users or whatever. Just opening a bank account for a company was a challenge. It was super hard to find the card issuing partner, so we kind of almost nearly gave up. The long list became the short list, and we got the no everywhere, and there was just one single company that finally said yes. We had a choice of one out of one in the end. And of course resources, because we were three guys with a laptop virtually. We were not meeting in a garage like in all those famous stories. We were meeting in Pavel's apartment in London, but still it was coming from very humble beginnings.
And can you tell us, so can we discuss who was this partner back in the days that gave you like this chance?
Yes, it was a company, disclaimer, not alive anymore. It was a company from Gibraltar called Wavecrest, who pretty much via ourselves and via another company called Zappo at the time pioneered that space. So they saw the opportunity, unlike most banks or issuers that we had approached, and they had enough courage to go after it. But then probably going forward became a little bit too opportunistic when the number of similar companies, they literally they tested the concept on us. They saw it works. They saw it's in high demand. They saw that the potential revenue they could make on it and the fees and yields were a lot higher than in the traditional industry. And they probably just became a little bit too opportunistic. The number of similar companies to ours mushroomed quite quickly to 20 to 30 probably, and they became a little bit not careful enough when onboarding, selecting partners, and this story pretty much ended for them in 2017, early 2018, when Visa Mastercard just recalled the issuing license. And the company went from $500 million valuation to zero in like 2 months.
Yeah, I guess that we have seen that happening several times, with the growth of cryptocurrency, but as well like traditional players not being so happy to support that early days. You have mentioned actually that now it was actually easier to get some banks, but also some card issuers. Can you tell us about maybe how you have seen this evolution, in the sense like what are you being offered now? Like how do you feel that those players are being supportive? How much more choice you get, and maybe how much more features you get as well? Like I think it's quite interesting.
Yes, of course. Well, there are two sides to it mainly. One is the traditional and the bigger players. They are starting to see the opportunity more and more. So I think I saw the number somewhere, 80% of Fortune 500 companies are doing something with blockchain at the time. Not necessarily with cryptocurrency, but something to do with blockchain technology. And almost every single top financial company in one way or another is engaging with crypto, right? Visa, MasterCard both have, again, starting from like 1-2-man departments, they now have those growing functions. MasterCard now allows to buy NFTs directly with MasterCard, right? Visa is pioneering payments on the blockchain with stable coins, right? So both of them are doing quite a lot. PayPal enabled crypto, etc. So the bigger players start to see the opportunity and go at it, and there's more and more trust in the industry, and regulation is coming, and it's becomes a bit of a positive cycle, positive circle. More regulation, more trust brings more opportunities. More opportunities bring bigger players, and yeah, just escalates.
No, it makes total sense. We have been discussing about, of course, traditional, like bridging traditional, like banking and the crypto world. How do you feel that actually fiat enables you to maybe unlock growth? Do you think it's the case, like the ability, for example, to top up by fiat? I guess it's some things that you would have added quite more recently than 2015 due to the lack of players back in the days.
There are some hardcore crypto fans that still deny anything to do with fiat, right?
Yes.
The kind of probably the real legends, right? But without the connection to the traditional financial system, crypto would stay a niche forever. I mean,
Yeah.
how much effort is it going to take to convince every single merchant out there to start accepting crypto? I mean, good luck with that even now. But back in 2015, that was unimaginable. So whether we like it or not, there has to be an on-ramp, an off-ramp, some interaction with the traditional financial system, because money is a conservative matter. It's not like, you can play a song on your cassette or CD or online. It doesn't really matter, you're not risking anything there. You try, it's hard to fail. But with money, losing your money is not someone would be excited about, and trusting your money to someone you don't trust is not, again, something that an ordinary person would do. So yeah, there has to be bridges, and if and when the technology becomes an order of magnitude better, then that would give enough reason for people to start actually using it beyond simple speculation.
Yeah, like fully agree with that. You have been mentioning the importance of regulation, right? And this is also what has enabled to get to the point where we are. I believe Wirex since the beginning has had a strong stance on regulation. Can you tell us a bit about what was your approach, and also maybe like the licenses that you acquired, and how you feel maybe it has enabled your growth?
Yeah, it's a double-edged sword, right? So on the one hand, it's hard, right? It's hard. It requires a lot of resources. I heard one bank executive, or probably not one, say that 70% of their resources go towards compliance. And in our case, it's probably somewhere along the same lines. And when I say resources, it's everything. It's monetary resources, it's developer resources, it's time, it's everything, right? Often, unfortunately, it comes at an expense of product features, right? Rather than roll out something really cool and new for our users, we have to satisfy yet another requirement from another regional regulator, right? So it's difficult. Then it also slows down your growth to a degree, because when you look at conversion, when you have back in the days, it was possible to allow users to have very basic cards with up to $2,500 limit, I think, without KYC. So you could virtually write Mickey Mouse on your card and get a card, right? And then $2,500 later, get yourself another card. So yeah, the conversion was much better back then. Now, when we look at our conversion, it's the funnel looks not like this; it looks like that. So we lose a lot of people along the way because people don't like providing personal data, right? In the world of data breaches, and some people are concerned about their privacy. Some people are concerned about possible consequences. Some just don't like to upload documents. So you lose customers along the way. Those people who are already on the platform, right? You advertise, you pay to acquire users, you use various acquisition techniques, and then they just don't convert because of that. Then there's also the churn, right? Because we don't only have to do KYC on every single customer and check the source of funds, etc. Then, as the customer moves through the life cycle, reaches certain limits, exhibits certain behaviors, we have to do ongoing checks as well, and it's annoying, really. It's annoying for me. It's annoying for everyone when a bank or a financial service provider asks you all those invasive sometimes questions. So people don't like it. So we see additional churn. So those are kind of the negatives. On the other hand, there are positives, of course, as well, because if this industry is, and I think it is, to become mainstream, then it simply can't happen without regulation. It would either remain a niche forever, or it has to be linked to the traditional system, and linked to a traditional system means regulated, because money plus scale, it just can't do without regulation, whether we like it or not. And where that's the case, regulation adds credibility, right? So if you're a licensed company, it means you've been checked inside out. All your processes, procedures, security, everything is being regularly assessed, checked, audited. So regulators are there for a reason, right? They want to make sure that end users, consumers get the right service and don't take unnecessary risks. So yeah, we have to live with it. It helps. It's difficult. That's the situation.
Yeah. We have to live with it is a good is a good summary. Like I agree that on the other side, it's really enable to focus on customer protection and bring this trust that also will enable to unlock crypto for more people, right? So like the more crypto adverse people that can basically just see that or that believe that regulations are here to make them safer and enable them to actually make the leap into crypto.
Yeah. And same for us. Back to your question about challenges, it's much easier to get a bank account when you are a regulated company in the financial space than when you're just some random ICO, right? So.
And that's absolutely true. Like we have seen that like in our discussion with the banks that essentially if when you have like the licenses, just the discussion changes because you are yourself like you have to follow like the very similar AML regulations, transaction monitoring regulations, onboarding regulations to banks themselves. So
in our case, we actually often feel that we're faced with more oversight because we do both the fiat and the crypto parts. Then, although e-money license technically has less requirements than a bank license, because you offer both digital assets and traditional assets, you're just being constantly under magnifying glass.
Yeah, I can imagine. Like specifically, we are talking about traditional finance players here, but we could talk about insurance providers, for example, as well, which when you provide both services can be very challenging to get on board with your story. So I totally get that. Let's talk now about your international expansion. How do you evaluate markets to expand to? and how do you make sure that your products remain consistent around geographies, or maybe actually you decide that no, you don't want them to be consistent around geographies? Can you tell us a bit more about that?
Sure. Well, how we evaluate markets, it's pretty much like in any other industry, right? We look at the size, we look at the potential demand for the service, and we look at regulation, because that's probably the most difficult part of entering any new market. And historically, when we just started, we were able to issue cards in 130 countries worldwide with a single issuing partner. Cross-border issuance rules, with both Visa and MasterCard at the time, were easier than they became more recently. Now, in every single jurisdiction, region or country, depending on the laws, so like Europe is unified. In the US, although it's the same country, regulations are different in every state, right? So we have to look and consider everything very carefully. Now we have to have separate banking relationships, issuing relationships, or our own license, principal membership, like we have in Europe, for example, with both Visa and MasterCards. We became the first crypto company to get there in the world, pretty much.
Congratulations.
Lots of, that happened, I think it was, 2020, if I'm not mistaken now. The first one that we got with MasterCard. So it's separate relationships, separate integrations in every single region. It often helps if our partners offer global coverage, but it's not always the case. And it's not always, 100% hit. There are a lot of misses. We had an office in Japan for a number of years, and we were very, very bullish on that market. At one point, it was like 30% of our customers and transaction volumes. But then eventually we had to pull out of Japan just because it became too difficult to pursue a license there. Long story short, you would have to have at least 20, 30 people on the ground in various functions before you can even start offering any product or service, right? Apart from all other things. Having 20 people on the ground in Japan is expensive, needless to explain. And there was a not such a big but similar story in Canada, for example, where we were really hoping to launch, but then decided to pull out. So it's not always, an easy journey. There are bumps along the road. US launch took us probably 2 years longer than anticipated, but we finally and eventually got there. So yeah, it's difficult. It's a little less difficult in the kind of core crypto non-custodial space. So we launched our non-custodial Wirex wallet, where we don't hold the user's funds, where the user keep their own funds. When was it? Very early this year, late last year, and it's been growing very fast because there are less barriers to grow for it, because users custody their own funds, and us removing the main friction points, which is handling the seed phrases, the private keys, all that complexity of self-custodial wallets. We try to remove it. We use multi-party computation technology, complex words, but if we oversimplify it, the user's private key is their biometrics, their Face ID effectively. So you lose your phone, you drown your phone, you get a new one, scan your face, and you get access to your wallet again. So it's a lot easier than the kind of traditional non-custodial wallets. So that product is growing faster, easier, because there's no regulation there yet.
Do you see that product becoming actually your dominant product in the future?
It's hard to tell. We see more people, as we kind of see it as a as a learning curve, right? So barely anyone would start with a non-custodial wallet. Although with Wirex wallet you could, it's relatively easy, but there you can on board, you can buy, you can hold and exchange cryptocurrencies, but you cannot really spend them or convert back to fiat. So its functionality is somewhat limited. Although it offers different features, it offers access to DeFi, it offers NFT support, etc. But in terms of traditional financial system products and features, it's of course less functional than the kind of main, we would call it custodial app. So you can't get a payment card linked to your non-custodial wallet in our case, the more typical journey would be someone starts using the card. Then we have this tool called Cryptoback. So on every single transaction you make with the card, this is the card, by the way, you earn cash back in crypto. And then, so you can start using Wirex without ever touching crypto. You just use it as your day-to-day card, and it makes more sense for you than to use your high street bank's card because you earn cash back. And then one day you start noticing that amount accumulates, and you think, oh, what is it? It's a token. Well, you can actually spend it, right? Or what are the other tokens? Oh, maybe I should buy $100 pounds worth of Bitcoin. And so it's kind of, you get onboarded into it, you get educated, and then you start questioning, oh, where's my crypto actually held? And oh, there's a thing called self-custody. I can be my own bank. There's Wirex Wallet for you. The next step. It's not always like that, but that's kind of the typical traditional user journey. So as they get more versed in the cryptocurrencies and blockchain, quite a few people start looking at self-custody. But it's hard to tell where it will go. So we see this as kind of more of an ecosystem. So there's an offering, a feature for every demand.
That's interesting. So a feature for every demand. So last question would be, what are the next demands or needs? So what's on your roadmap to the extent of what you can communicate to us?
Well, we've always been mostly focused on payments, and we've figured payments out, right? So on Wirex, you can pay with any currency anywhere you are without worrying about exchange rates, etc. So all your fiat currencies and stable coins are converted at interbank rates. So I travel quite a lot. I check on the app every single time what exchange rate I get, benchmark against competition. I see it's great rates that we do, even for currencies that we don't directly support on the app. You still get very favorable exchange rates, and you don't have to pre-fund your card. You just link your wallets. So I prefer to spend DAI stablecoin, for example, and then GBP is my second priority. And then if I accidentally run out of funds in those wallets, it will be Bitcoin, for example, right? But you can configure it as you want. So payments are seamless with Wirex, and you can pay with a card. You can get paid. You can send money via blockchain. You can send money via bank transfer. That functionality is coming back soon. So that's all good. Then we started adding other features of the financial system. So about a little under a year ago, we started offering X accounts, which is interest-generating accounts, high-yield accounts for users that have some spare funds to put to work. So that was a bit of an evolution. And the next one that I can talk about without giving too much of a spoiler is a lending product, right? And in our case, it's not just a lending product because there's plenty of lending products out there. But combined with the card, which technically is a debit card, the fact that you can borrow against your crypto holdings, against your Bitcoin, for example, maybe now it's hard to believe that it will go up with all the blood on the markets over the last couple of weeks. But if essentially you believe that its rate is gonna, the price of Bitcoin is gonna increase, you don't want to spend it really, and that's what we see. People don't like spending their Bitcoin or Ethereum or other tokens that they hope may appreciate one day. But people are very happy to spend stable coins and fiat currencies. So combined with the card, the lending product becomes it makes a debit card effectively a credit card, right? Because you can get stable coins or fiat currency against your Bitcoin, not spend your Bitcoin, spend your credit with the card, and then just pay back and keep your underlying asset, and it appreciates one day, hopefully.
Yeah. Cool. Thank you so much for all of that. So that's the end of our Crypto Legends episode. We learned a lot with Georgie, who is the co-founder of Wirex, about Wirex story, how they launched one of the first crypto-enabled debit cards in the world, their approach to regulations, their approach to product development and bridging traditional and digital finance, and their approach to international expansion. So thank you so much, Georgie, and I hope to see you soon in another episode of Crypto Legends.
Thank you, Sophie. Have a good day.